The Finance Ministry has issued a major clarification regarding CIBIL scores and bank loans in India. In a written response to the Parliament, it was clarified that first-time borrowers are not required to have a CIBIL score to be eligible for a bank loan. This means that banks and other lending institutions cannot reject a loan application solely because the applicant does not have a credit history or a CIBIL score. The clarification was announced by the Ministry of Finance and is based on the Reserve Bank of India's Master Direction issued in January 2025. The move addresses a long-standing issue faced by millions of individuals who have never taken a loan or used a credit card. Previously, the absence of a CIBIL score often led to an automatic rejection of loan applications, making it difficult for new borrowers to access credit and build a financial track record. A CIBIL score is a 3-digit number, typically ranging from 300 to 900, that reflects an individual's credit history and repayment behavior. It is issued by the Credit Information Bureau India Limited, commonly known as CIBIL. The reply noted that the RBI has granted 4 CICs with Certificate of Registration to carry out such functions, which are namely TransUnion CIBIL, Equifax Credit Information Services, Experian Credit Information Company of India, and CRIF High Mark Credit Information Services. According to the minister, fee chargeable for obtaining credit score is regulated by RBI and should not exceed ₹100 for an individual's own credit information. Lenders use this score to assess the creditworthiness of borrowers. However, the Reserve Bank of India has clarified that it has not set any minimum CIBIL score requirement for loan approvals. Instead, banks are expected to make lending decisions based on their own integral policies and commercial considerations. While a CIBIL score remains an important tool for assessing risk, it is now just one of several factors banks must consider. Other factors include the applicant's income, employment stability, and existing financial obligations. This approach is intended to promote financial inclusion and ensure that individuals without a prior credit history are not unfairly excluded from the formal banking system. For those looking to build a good credit score, experts recommend maintaining responsible financial habits such as timely repayment of loans and credit card bills, avoiding missed payments, and keeping credit utilization low. Over time, these practices help establish a strong credit profile, which can lead to better loan terms and faster approvals in the future. The Finance Ministry's clarification marks a significant step towards making credit more accessible, especially for first-time borrowers, and supports the goal of financial inclusion across the country. For more news and updates, keep watching Live Mint.